Welcome to TheoTRADE. This is Don Kaufman. July 5th, 2024. 25 minutes left inside of this holiday week of trade. And this market is just a one stock phenom. I am going to explain that and much more here, of course, on this TheoTRADE weekend update. The very first thing that I want to mention is, of course, well, what you're seeing in the marketplace right here, right now. With 24 minutes left inside of the trading week, the SPOOs, they're running. I mean, they're up 30 handles. And look, can't deny the S&Ps, they are hot, but they're doing it as, once again, like this one stock, as I call it, phenom, or a one stock wonder. I mean, all right, you could definitely make the argument, well, Microsoft is up very nicely today. Yeah, Microsoft's breaking out a little bit to the upside over here. And then, of course, we can point Apple. Well, Apple's getting it done. Sure, you got me there. Oh, what about Google? Up another 2.6%. But it's all about Meta today. Meta's up to the tune of 5.3%. And we're going to be looking at this quite extensively. Take a look in terms of auto expected moves. And for those of you, if you're not really familiar with expected moves, well, I always say this, you get familiar. But just to give you a quick, handle on this, the option marketplace depicts forward risk. And for example, if you say, well, the option marketplace this next week is supposed to move, up or down $10. Now, it's important to know that the option marketplace does not necessarily dictate directional bias. But the option marketplace might say, Meta's supposed to move $10. Yeah, tried for the corner and missed. Look at the size of the move. I mean, that's all that we're doing here with these auto expected moves. These bands, upper and lower over here, are the expected moves. And again, in that example, instead of moving $10, we doubled it. We absolutely doubled it. And we shatter through that. And a lot of people, they don't have respect for it. They don't really get like, oh, who cares, man? So what, man? We moved beyond, because the option marketplace has literally billions of dollars resting on those expected moves, and to shatter them, okay, is to this extent, all in one trading session, is not the norm. And we're going to talk about that again in quite some detail. But let me give you kind of a rundown, because the bifurcation in this market also, it just continues to kind of pick up. And that bifurcation is, you don't have to look very far to look at stuff like, the financials. They're down today mildly. Look, they're basically flat. If you bring up auto expected moves, the financials, though, are in fact still sitting at their upper edge of expected move, meaning that they did in fact have a bullish week. But do the financials even matter anymore? But let's push that aside for a second. Then I bring up the energy sector. And the energy sector, interestingly enough, the energy sector is actually at the lower edge of its expected move. So some pressure to the downside, specific, of course, to the energy kind of complex over there. Again, doesn't seem to have any bearing on this market whatsoever. I mean, look, the whole marketplace, all right, has and continues to become tech. That's it, everything that's got over $1 trillion market cap is the marketplace. And we're going to describe that in quite some detail, well, right now. One of the first things, again, I want to get into, though, is a lot of people really didn't want to pay attention to this week. Oh, it's a holiday trading week. It's this, it's that. The S&Ps, they're still getting it done. In terms of the daily volumes in here, and I cannot stress this enough. The daily volumes, even with a half a trading session kind of packed in here on Wednesday, and here's your half a trading session. Today, again, with 20 minutes left, but that volume's going to get up here. We're still getting it done. Like, again, the holiday trade is still packing a punch, and more, specific than looking at just the S&Ps. And the S&Ps is just a great way to kind of gauge overall, engagement, if you will, in the marketplace. Start looking down the list, some of the usual suspects. And today, it's all about Meta. And Meta, no joke, is running into highs, into the close over here. When you take a look, though, at Meta, specifically, we're going to look at the option order flow. I mean, this is something, it trades, right? And I'm telling you guys, like, well, it's holiday trade. No, but I'm telling you, it still packs a punch. Meta is just all about the call options in here. I mean, if you really want to know what this entire marketplace is today, it's call buying. All right, call buying, generating ultimately market makers to have to turn around and buy shares of stock in their hedge, creating this upward kind of cyclical gamma squeeze. And we're locked in it. We're just driving right now higher exclusively because of Meta. And again, there's a side order of a little bit of Microsoft. And I get it. Microsoft's up 1.5%, and Apple's up, 1.8%, and Amazon's getting it done, and Google's getting it done. Like, look, there's definitely more performance over here. Nvidia, though, down, kind of offset some of those. Nevertheless, though, Meta takes the cake, and it does almost 1 million option contracts. And if you look at the market cap in here, it doesn't take much. Okay, especially when people, oh, it's a slower holiday trading session. It's really not, but it doesn't take much to drive a marketplace when you have this kind of magnitude, this kind of market capitalization behind it. And again, I'm not telling you guys anything you don't know, but it really has become on a daily basis. We're just shifting from one stock to the next, which brings me, to my next point. I'll come back a little bit to Meta, is that, what I call this Tesla saves the Nvidia out of this marketplace. So in last weekend's update, and you got to bring up the Tesla chart because I was talking about expected moves and about shattering expected moves. And this one, I mean, literally defies, most expectations, statistics, expected move, whatever you want to call it. Here's one almost for the record book in terms of how significant, the move was beyond what was expected. If you look here and it's like, well, we were supposed to be, and I'll just round it to 210. Well, we missed 210 and went straight for 250. That's a $40 move beyond what was expected. And what was expected is literally ironically, right around a $10 move inside of Tesla. Tried for the corner and missed, had about a $50 move. And you're looking at moves that you can call 4 and 5 standard deviations, which if you guys get into the mathematics of this, you're like, that can't possibly happen. But Tesla, even though its market cap is nowhere near, all right, some of the other big tech companies. I mean, look, you're looking at an $800 billion company right now, right? Pales in comparison. The one thing you need to have perspective on and why you have to pay attention to Tesla, it's got in the neighborhood of between a 60 and 70% implied volatility. And that may not mean much to many of you. But if you compare it to something like Apple, Apple's got like a 22 vol, okay? I mean, you can literally say that, Tesla is even at an $800 billion company, but if you volatility weighted Tesla against Apple, they're basically equivalent to one another. And that's one of the perspectives I wanted to give you. And yeah, I know Tesla's got a little bit of a bid under it, but this week really does belong to Tesla. With a 4 or 5 sigma move to the upside, okay, we're going to look right now at the SPX. And you realize the SPX started the week right around that 54.60 handle. Okay, right now we're trading 55.68. It's almost a 110 handle move, almost a 110 point move in a week that we were supposed to move about $58. So we're looking here in the SPX also at almost a 2 standard deviation move right now. Again, some just phenomenal moves, but these moves are largely predicated on a one stock phenom where we literally just rotate. All right, so this week, pretty clearly, Tesla, is in play. Right? Tesla's in play. And I got to say, again, last week I was talking about maybe tech lost its mojo. Apparently that is not the case. Nvidia has definitely lost its mojo, but Nvidia has not, unequivocally has not seen any sell side activity. Moreover, Nvidia this week literally hit the upper edge of the expected move and is not far from it. I mean, it's like, is Nvidia really had much of a down move? And the answer is absolutely unequivocally not. 1 week cracking outside of an expected move and then pulling back in means absolutely nothing. If anything, Nvidia has consolidated to some degree. Okay, but the mojo of the marketplace Now we're playing the game of musical chairs. So here we are inside of Tesla, okay, where Tesla faded a little bit today. Okay, all of a sudden Meta comes on hard. And again, speaking of Meta and Tesla, as I was reiterating a moment ago, Meta is doing almost 1 million contracts. Check out Tesla. When I talk about something being in play, one of the ways, how do you determine it's in play? I don't know, just look at the option volume. Tesla's doing almost 4 million option contracts today. And for those of you that are not comfortable with like, well, I have no idea what 4 million option contract really means. So in an average trading day lately, we've seen about 42, million contracts total in all the option markets, right? So in every product, you do about 42 million. And that comes from an OCC report. That's the Option Clearing Corp. This is a product that, if it does 4 million, well, that's 10% of all the volume in the whole market in options is strictly into Tesla. And then for a fact, that Nvidia is still trading to some degree, right? Okay. Oh, wait, Nvidia is good for another 4 million. Just bear with me for a second, because when I'm starting to talk about a one stock phenom, right? So we just said that Tesla's good, for 4 million. And that's Tesla. Then we actually just looked over here at Nvidia, and that's good for 4 million, right? Which is Nvidia. And then of course we had, Meta, which was good for 1 million. All right, kind of pales in comparison, doesn't it? There's Meta, but wait, there's more. Okay. Then you just look over here at the spiders. What are the spiders doing? And spiders are the most prolific product pretty much out there. They're good for about 6 million. Okay. So now you're up to spiders, which is 6 million. And then you have the SPX, and the SPX is usually good for about 1 million in here, but you guys get the point. Almost the entire marketplace, is centered around a handful of products. And you wonder why I constantly say, why is expected move so important? Well, why do I need to know this stuff? Because that is the market right now. There's nothing else really in play. I know that people are looking stuff off the beaten path. I know people look at Walmart today. All right. It's a pretty stellar move inside of Walmart, but trading 115,000 options. I'm not going to deny that Walmart just broke to the upside. Okay. But it's doing it, and everything is doing it on the back of what is tech. So tech ignites basically the rally, and everything kind of gets dragged along with it, kicking and screaming. But this has everything to do with what we term, the dispersion trade. So when I actually then ask the question, why Meta? Why now? Because we're rotating. We're literally rotating from one product to the other to keep the dispersion trade alive. If you guys are not familiar with the dispersion trade, and this is going to play a lot into the next portion of the conversation, that's this. What the dispersion trade predominantly is, as of right now, is that trading firms are out there selling, if you will, boatloads of SPX options. Now, I don't want to get too detailed into the actual, minutia, if you will, of the trade. But the bottom line is trading firms are coming in there and they are selling boatloads, of S&P options. So why do they do it? To collect premium. All right. So they basically sell, all right, premium. And you go, well, how do they hedge it? Well, they can obviously hedge using these S&P futures and effectively real time and so forth, but they sell premium. And with the credits they're collecting, and I'm just breaking this down in the most easy fashion, with the credits they're collecting, they're going out, and buying premium. Where? In a lot of the big tech stocks. And they're very biased with buying the premium. Sometimes they're just out there buying calls. But there's two interesting kind of, artifacts, if you will, of this particular trade. Number one thing, and this is really bothersome. SPX volatility is absolutely rock bottom. Everybody keeps looking over at VIX and turning around and they're like, and the VIX is a 12 VIX. It's a 12 volatility out there. All right, look, I don't really look much at VIX. I don't look at VIX because I'm going to tell you right now, and I'm an SPX geek. That's kind of where I come from, is the index background, but I don't look much at VIX right now because it does appear that volatility is heavily being suppressed. And when I say suppressed, it's not like throwing a blanket over it. It's being suppressed simply because every trading firm on the street over here is basically doing the same thing. It's an incredibly crowded trade. There's two things they're doing. Number one, they're selling premium in the SPX. And number two, every trading firm out there that's involved in volatility, they're selling front month vol and buying back month vol. That's basically what they're doing. And that vol is just getting annihilated in the major index products. Meanwhile, over here in technology land, does this look like it's being suppressed in terms of volatility? Oh, hell no. The moves in here are absolutely phenomenal. These are moves, if you look at expected moves, as I said earlier, these are moves that theoretically, they just shouldn't happen. You shouldn't be seeing like 5 sigma type moves in here. Okay, anything that's in play is just absolutely unequivocally, it's rocking. I mean, you need only look at something like Tesla to kind of understand. So you're taking all the premium, okay, that you sold inside of SPX, taking all the premium that you sold inside of S&Ps and all the volatility premium, and you're applying it, for example, to buying the living crap out of calls, specifically today, inside of something like Meta. It's quite special because you can see the calls, and then you go, how do you know they're buying calls in Meta? Just look, traded at the ask or above. Okay, and I'll highlight that again, traded at the ask or above. Okay, that's a huge number. Almost 200,000 are trading at the ask or above, traded at the bid or below. And that basically means if a market is $3, okay, at 310, when I say traded at the ask or above, this being your ask, they're just basically coming in and sweeping the marketplace. They're like, I'll take them. All you got at 310, and that's traded at the ask or above. So you know that that's somebody that's on the buy side, okay, of that marketplace. And this is just downright scary when you start looking at a marketplace where you can influence the entire S&P effectively by, well, buying premium. So then, of course, everybody thinks, well, how does this trade unwind? Which actually brings me to one of my thoughts here, and I'm going to come to it right now, is I'd be very, very careful in this marketplace trading any short duration options. And I've been talking about this extensively, specific to the S&Ps, specific to the spiders, okay? Do not get caught selling any of the short-term stuff, any of the zero DTE, okay? Zero DTE sales are out. You want to be a buyer of short-term premium, and I am really stressing that one. Okay, I'm going to tell you right now, you bought premium this week, you made a ton of money. Okay, you made a ton of money. You had to be a buyer of premium. You did have to buy calls over here, but we might be able to actually, hit the cover off the ball in some coming trades over here, because being a buyer of short-term premium is the place to be. And you go, well, how can you make that justification? Well, you can just see, plain and simple. You realize that this week you could have bought a straddle inside of the SPX and made money. I mean, the at-the-money options this week, early in the week, the at-the-money options, that straddle was trading, okay, for about $54 early in the week. $54. Actual move, over 100. That thing would have made money. Wasn't even like a directionally biased trade. So I'm telling you, want to be, again, a net buyer of premium, especially short duration stuff. One of the other aspects, all right, really worth considering right now is in volatility itself. Okay, as I said, I'm not really a proponent of VIX in terms of like, justification. Well, it's low volatility. I mean, again, so what if the VIX is 12? Does Nvidia, at $126 stock look like a blue chip? Is it moving like a blue chip? It's a wild child out there. Meta's become a wild child. Tesla, okay, like a 4 and 5 sigma move. These are not, okay, low volatility. This is a high impact, high volatility marketplace with a lot of volatility suppression on the side. What you want to do in volatility right now, okay, just take shots. It'll pay off eventually. Just take shots. You can go out 25, 32 days, okay, buy out of the money call spreads. Again, when this volatility does start to take off to the upside, it is going to erupt. It's going to make something like the VIX explosion look like absolutely nothing, because eventually we're going to unwind that volatility. Right. And it's amazing because there's political upheaval right now. There's geopolitical risk. We can go on and on. Nobody knows what's going on with, Jerome Powell and interest rates. Everybody thinks that there's two cuts coming, but nobody's sure. We're sitting in a 12 VIX. You have to stop looking at the VIX to try to justify it. You have to start looking at equity products like Tesla that are sitting at a 70% implied volatility, or Meta, okay, which is all of a sudden coming to life. This is a 30 vol. This is a 30 vol product. Okay, that's capable of moving almost 6% in a day. Does that seem normal to you? Does that seem like blue chip? Absolutely not. Okay, markets are getting ripped apart at the seams. And the last thing I want to bring up, of course, on this weekend update is right here inside of none other than crypto, specifically Bitcoin. All right, and I'm going to leave you with this thought. What are the implications here? Bitcoin loses the $60,000 marker. Are we just done? Okay, are we moving out of it, or does it have implications that are going to resonate back to the rest of the marketplace? Because all of a sudden, it's ironic. You see gold break to the upside. By the way, we took off a bullish gold trade today. Nice, profitable. Took off a bullish trade. So trade. So you've actually got gold breaking to the upside. Okay, crypto breaking down. We're going to keep very, very close eye on this, because it could be the first signs of some pretty considerable capital rotations. So with that, all right, we just moved again through a week that basically had about a $58 expected move. Actual move, well, you're over, okay? Over about $110 right now in the SPX. What are the implications then for next week? So next week, approximately 7 days out, you're at about a $63 move here. Once again, I can't stress this enough. Now that $63 move, that's not set in stone yet. I just want you guys to understand a $63 move. You do realize we just came off of a week. How many trading sessions did we even have this week? I called it a 4 trading session. We didn't even really have 4 trading sessions this last week. We had about 3.5 trading sessions. Okay, we were supposed to move $58. We didn't move $58. We moved more like 110. Now we look 7 days out and we're pricing in what, a $63 move? It's ridiculous. That's what volatility suppression is about. This is a ridiculous number. Do not be caught selling short duration premium. With that, a very special announcement coming to you now. Ladies and gentlemen, we're back. TheoTRADE is announcing its 2024 live event, Unlimited Trading Horizons. Go to TheoTRADE.com/24. Again, it's TheoTRADE.com/24. All right, Unlimited Trading Horizons, September 12th through the 14th. And we are coming back to Scottsdale, Arizona. Come on, Scottsdale in September. Yes, it can be a little bit warm. You guys are absolutely going to love this event. We're back to Scottsdale Resort at McCormick Ranch. This is where we kind of kicked off the very original live TheoTRADE event. I'm pretty excited about it. By the way, we are bringing out everybody for this event. When I say everybody, I mean everybody. So on Thursday, which is when the event kicks off, on Thursday, September 12th, registration will be open. We're going to do a happy hour live event and, of course, cocktail party on Friday, September 13th. It is a full day. We're going to bring in a number of guest presenters as well as the entire TheoTRADE team. Saturday, September 14th, we're not just wrapping stuff up. That is also going to be an absolutely packed day. Okay, you're going to have breakfast, lunch served at those times. Obviously, the cocktail party on Thursday night. The entire event will also be streamed. Okay, so we will stream this live event. If you cannot make it to Scottsdale for the September event, you can stream it in the comfort of your own home, and that streaming will be available via recording for those that hold a ticket. Again, when I say everybody's coming out, obviously myself, Jeff Bierman, Corey Rosenblum, Tony Rago, Brandon Chapman, Blake Young, and Gianni DePoce doing his very first TheoTRADE event. You get to meet everybody. Look, the first step in here, come in here, buy your ticket now. Look, this is an event that is going to sell out very, very quickly. Come in here, again, buy your ticket now. Get there, get ready. Look, I want everybody to show up live. It is TheoTRADE.com/24. Thanks, everybody, again, for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.